Hi everyone. Today will be the first Forex video, or rather the analysis of today's position to start with. Let's look at the chart of the day. What we see from the chart of the day is the SMT, which formed at our lows. Then we can see the daily FVG, which acts as our internal liquidity and BSL as external liquidity. According to the principle of internal to external liquidity, we realize that the price should probably continue to rise. Let's take a look at the H1 chart. What we see on the H1 chart is the SMT we formed with DXY. The liquidity capture in the form of the previous day's high. The closest pool of liquidity we have is SSL and H1 FVG. This is exactly what I was looking at during this trade. But I will say that price doesn't always go where you might expect it to go, and an analysis can differ from trader to trader. Now let's pay attention to the M5 chart. We see a violation of the structure, the SSL capture of the Asian low, and the price reversal at this moment. Many thought that the price would reverse globally and continue to grow higher, but nevertheless here I want to make some remark. The liquidity of Asia. Low was not removed by a sweep, it closed by the body. Yes, there are exceptions in such situations, but usually if it is closed by the body, then more often the price simply returns for a retest, which is what happened in this case. The price returned to M5 FVG and received a reaction accordingly, but this could also be manipulation. If you pay attention, we have a midnight opening in New York. For this, we have a rule that we need to sell above the midnight opening and buy below the midnight opening. Respectively, M5 FVG, we were above the midnight opening in New York. Plus, we had a merger with SMT. Respectively, I opened a position using a market order when the price reacted to M5 FVG and set the stop loss at the point where we had SMT that is behind the high and take profit at 2RR, which corresponded to the price moving beyond the midnight opening point. The very idea of 2RR trading does not imply that the price will reach 100% of your DOL. The task of the 2RR approach is that you must determine the short term within M5, where the price can most likely logically go, even if it is as an additional manipulation or a corrective movement. 2RR allows you to trade both against the trend and along the trend. The point is that the price, even as a manipulation, still passes through this passage of 2% of the price movement. And not always, but quite often this happens. Again, everything is checked statistically for each unique system. That is, we can say that 2% is a kind of golden ratio of risk and reward. But again, I will say this in my case, something else may work for someone. The very idea of 2RR implies variability in the choice of positions and adaptation to the market situation. Of course, this approach may differ from yours because there are so many traders, so many systems and opinions. Thanks everyone for watching.